Good morning, and the question on everyone's lips at the moment is whether the introduction of tariffs and duties on imports of steel and aluminium will have a short, medium or longer term impact on the value of the Australian dollar. The answer in the short term is very little, and we saw that evidenced by the increase in the Australian dollar throughout the end of last week and the rally that we've seen continue throughout trade on Monday. Now, Malcolm Turnbull was able to secure an exemption on those duties, but will that exemption extend to other currencies and key Australian trading partners? It doesn't appear as if Trump is willing to extend those exemptions to China, and as a major exporter or importer, of Australian iron ore, the key component in steel production, that could well have a longer term flow-on effect. Of course, trade wars are notoriously bad for consumer-led growth, as it weighs on consumer prices as manufacturers pass on those increased tariffs and duties to the end user, and that may have an impact in slowing that global economic growth. And it comes at a time where the rallies that we've seen in those areas throughout this last year are starting to wane, and that may throw into question expectations for monetary policy tightening, as our own domestic indicators appear to be slowing and there is no real insight into an RBA rate hike. If we do see a full-scale trade war and the impact of duties extend to other key consumer goods, then that could well have a longer-term impact on the Australian dollar and force a shift back below the 75-cent handle. However, in the short term, our focus this week remains on that evolving story and US CPI data for a broader picture of the inflation outlook and Fed monetary policy.